If you're a doctor, you need to watch this. This is the ultimate guide on how many doctors and surgeons have built enormous amount of wealth for their retirement in Canada. I've been helping medical professionals, doctors and surgeons for almost a decade, and in this video I'm going to explain the strategies that many have used to build wealth in 3 simple steps. My name is Ari Armani and I'm a real estate agent in Toronto. Please make sure to subscribe to my channel, and if you need to book a consultation meeting with me, use the link down in the description. Here in Ontario, Canada, medical doctors and other professionals can benefit significantly from incorporating their practices and purchasing real estate through their corporations. This is an ultimate guide on how this can be done. Step number 1 is to incorporate. Incorporation for medical doctors include the following. First is a form of professional corporation. We call them in short as PCs. So medical doctors can incorporate by forming a professional corporation under the Ontario Business Corporation Act. This allows them to benefit from tax deferrals, income splitting, and limited liability. Next one is naming the corporation. The name must include the physician's name followed by professional corporation. For example, Dr. John Doe Medicine Professional Corporation, as an example. Number 3 is register with the college. The corporation must be registered with the College of Physicians and Surgeons of Ontario. We call it for short CPSO. Next one is shareholder restrictions. Only physicians licensed by the CPSO can be shareholders. Family members also can own non-voting shares for income splitting purposes only. So these are the benefits of corporation. Among the benefits are tax advantages. For example, PCs benefit from a lower corporation tax rate, around 12.5% on the first $500,000 of active business income in Ontario as of 2024. Of course, things may change later on. And as you know, this is a significantly lower than personal income tax rate. Next benefit is the income splitting. Dividends can be paid to family members, for example, a spouse or children, etc. But again, they have to hold non-voting shares. Next one is limited liability. Incorporations provide limited liability protection for their personal assets. And the next one is tax deferrals. Doctors or physicians can retain earnings within the corporation and invest them, deferring personal income taxes. Step number 2. Step number 2 is buying real estate through the corporation. That includes the following. First, determine the purpose. Decide whether the real estate will be used for the practice, for example, or it's going to be used as an investment property, or both. Second is financing options. Consider the following financing options. For example, you can do corporate financing, obtain a mortgage or loan in the corporation's name, or you can do personal financing with corporate reimbursement, which means secure a personal loan and then have the corporation reimburse you. Next one is purchase process. If you're using the help of a realtor, your realtor can take you through the details of this step. The steps are including finding the property with the help of your realtor or your real estate agent. Look for properties that align with the corporation's goals. For example, if you need an office space, rental properties, etc., etc. And next one is negotiating the price and terms and drafting the offer and the contract for that property. The last but not least is getting financing and inspection done. So make sure you have financing and appraisal in order. Also, don't forget about the inspection if you have that condition in your offer. Fourth is ownership structure. This is important. There are 2 types of ownership which I'll take you through them. The first type of ownership is direct purchase. It means the corporation buys the property directly, which provides clear separation between personal and corporate assets. Second one is through a holding company. Set up a holding company to own the real estate. The operating company or the PC can pay rent to the holding company, creating a stream of income for that holding company as well. More details on this in another video, as this is a little bit complicated to set up and it totally depends on each person's investment goals. So it might be a good option for some, but it's not going to be a one-size-fits-all kind of business. Fifth is the tax consideration. So capital gain exemptions, for example, PCs or professional corporations do not qualify for lifetime capital gains exception. However, holding real estate in a corporation allows for tax efficient growth and potential tax deferrals. Depreciation or CCA, we call it like capital cost allowance or CCA in short. You can claim CCA to reduce taxable corporate income, but remember, that's also a double-edged sword. So meaning that claiming CCA reduces the property's adjusted cost base for the future capital gains calculations. So this one is a little bit tricky. And again, it depends on your investment goals, what you want to do with the property later on, how long you're going to hold the property, etc., etc. CCAs can be good for someone, but may not be optimal to use for another person who is thinking of disposing of the asset sometime in the near future, etc., etc. The sixth one is management of the property or property management. Operational considerations, for example, example, if the property is used as an office space or rental apartment, please make sure it meets regulatory requirements. And also now let's talk about the rental income. If the property generates rental income, the corporation must report it and pay corporation tax on this income. Expenses related to the property can be deducted, of course, and expenses are operating costs, which depends on the type of the property. Can be, for example, lawn care, security, mortgage payments, interest portion of that, of course, property management fee, repairs, and so on. So now let's get to step number 3. Step number 3 is the ongoing compliance and management. Here you need to take care of the following, or hire people to take care of the following for you. These are including annual filings, maintaining good standing with annual corporation filings and renewals with the CPSO. Next one is bookkeeping. Keep detailed record of all transactions and make sure you have proper accounting for income, expenses, and depreciation in place. A good accountant can help you with all that, so no issue there. Next one is professional advice. Regularly consult with legal and tax professionals to optimize the benefits of the incorporation and real estate ownership. As you know, laws may change from time to time. So this is how, by incorporating and strategically purchasing real estate, medical doctors and physicians can effectively manage their practice, optimize their tax situation, and also build a diversified investment portfolio for their retirement.